Hey, Scott, thanks for having me. Congrats on the new show. You know how to time markets. I mean, 2 years ago, we were having this conversation. I think we spent about an hour together at the start of COVID on March 26th, when I felt about like I do today. Growth stocks were under assault. They were cratering. Ironically, now we're normalizing, and growth stocks are down even more than they were at the start of COVID. But it's good to be here. And while I think we did see the normalization in multiples as a likely outcome toward the end of last year, we certainly, our base case, as you know, was a soft landing, 4 to 5 rate hikes into this year. We didn't see the concerns emerging about hyperinflation, about 10 to 12 rate hikes. And we certainly didn't see this tragic war unfolding on the doorstep of Europe. And as a result, last year we held up better than most because we own high quality stocks and we were short lower quality stocks. But as you know, in the first 3 months of this year, all the high quality stocks are being destroyed as well. And so we're getting hurt like everybody else. This is a hard game. We're down on the year. But I think if you have a time horizon over the course of the 1 to 3 years, we see a lot of stocks in our universe that we not only think are going to end the year higher, but we think are going to be multiples higher as we look out over the next 2 to 3 years.
Man, I love how honest you are, and I know our viewers do as well. And frankly, I was going to play some sound from you from our Delivering Alpha event last September where you called a lot of this, but I don't even have to do that anymore because you just went through it. The bottom line is, where I wanted to start this whole interview with is, you called it, you got a lot of this right, but multiples have come down a heck of a lot to this point. Is it done? Is it close to being done? What do you think?
So let's talk for a second about what I called. I expected that as the world normalized post-Omicron, that we would get back to the 5-year average multiple. We were about 30 to 40%, depending upon which basket you looked at, software, internet, above the 5-year average. We didn't think that was durable. We had given most of that up by middle of December. And now we've shot right through the 5-year average. In fact, our internet stock index is at a 10-year low, and software is back nearing where we were in 2016 before the re-rating of software occurred. So we're in the neighborhood of a tradable bottom. If you have a 2 to 3 year time horizon, there is no doubt there are a lot of stocks that are going to be up well over 100% off this bottom. But listen, there's massive uncertainty in the world. What is the Fed going to do? What is the rate of increase? How many increases? What's going to be the inflation print in April? And what is going to be the resolution to the situation in the Ukraine? So it doesn't surprise me at all that buyers are on the sidelines and that sellers and short sellers are having a field day with stocks. I don't think stocks today reflect great price discovery about where these stocks are going to be in 6 months, let alone 2 years. But I'm also eyes wide open to the fact that we could go lower before we go higher.